Good afternoon, all. Ira Epstein of Linn Associates with your financial market wrap-up. And what a day today is, but it is Tuesday, the 9th of March, 2021 at 4:35 p.m. Central Time. Now, I'm not into the opening, doing these a bit early today as I've got some personal events I'm taking care of tonight. But in any case, oil prices down a bit, gasoline up, and I'd expect gasoline to stay strong. Why? You can bring on the oil wells much quicker in the oil supply to the market than you can get the refineries producing as they were before the Texas situation. You've lost time there. You're going to have a strong driving season. If I had to earmark an area, I like gasoline there. As for looking at Bitcoin, I've been telling my traders this market can go back up, and this morning I was covering that in my morning update. And speaking of that, I appreciate you all watching this. We have a lot of viewership, and I certainly appreciate it. For those of you that haven't seen me, you'll see how I cover the markets in a minute here, and I cover them the same way each and every day, and on the weekends, I give you a weekend review. If you like these, please hit subscribe on your YouTube channel. It helps me. If you have comments for me, I'll write back to the ones that I'm able to. Remember, the government doesn't allow me to say, I think you should go, John, and buy this right here and do that. Not able to do that. I wish I could, but you can't do it in the public domain being a futures broker. There are certain rules we have to cover, but I can cover the broad market in a different way, and I do. And if you look at how I write back, you'll see that. As for the stock market, you had taken this market, pulled it down, and you let go, and it came back. My problem is nothing has changed. You had broken the stock market, but how will the tech stocks respond to higher interest rates? They stalled against the 162 area. And if you're a reader of my written research, I gave you a series of numbers. Today is Tuesday. I think it was Friday or Sunday night. And I said, how will this market do against the 1.6, then the 1.7, 1.8, 1.9 level? Because you're going to get creeping interest rates. Will you get small pullbacks? Yep. Are we going back to 0.5? Why would you? You'd need to get, in order to do that, 0.5, 0.6, 10-year note yield, in my opinion, another variant of COVID-19 or a pandemic of some type that we don't have a vaccine for. That might do it, where you tie in everybody. But that's not where we're at. That's science fiction. Right now, the science is that we're coming, in America at least, we're going very quickly into what? We're going into the post-COVID period. So the financials took off, the industrials have taken off, tech's got hit, you can see that. In the futures market, you've taken premium out of the gold. Why? Because higher interest rates and a higher dollar that's been going with that to a degree is weighing on that part of the market. Let's go to the charts. When we take a look at the weekly area of charts, the first thing is you're not back to all-time highs. I know that's saying something in markets that are like this. Do we still have a bullish bias? Most certainly. The market is trading over the 18-week average of closes. This is a close-only chart. It's called a pie chart, but it's a close-only chart. And what you've done is you're keeping the bias as long as prices stay over that. When I go to the daily charts, I have been pointing out now for how long that this is an important resistance area. And when we fell down like we did here, I said, well, look at that, proved it. And when we started up, I said, I still think that's going to be a resistance zone. And you can see what the market's doing. Let's lay a moving average on this. Do that in 1 second. I want to first put this study. You may not have ever seen this study if you're new. This is called a swing line. I wrote this technical study many years ago because I was convinced at that point so I'm thinking it's 20 years, maybe longer than that. I could convince my son, who was then about 12, 13 years old, that he could pick up any chart of anything. And if he looked at what I called the swing line, and I taught him how to do this, he could tell you if the market's trending or not and what's the risk associated with the trend. If you believe, as I do, that a downtrend is made of lower highs and lower lows, well, the swing line will point that out to you. You'll get apexes on it. When you have a market that's bullish, you'll have a higher lows and have higher highs. That gets broken when you break through it, and the market then either enters a bearish trend or goes neutral. It doesn't just go from bull to neutral, from bull to bear typically. It can, but often it goes neutral on you. There's more filters. The main filter I use on a chart for moving averages are just this, the 18-day moving average of closes. I call it the line in the sand. I've learned over the years that as a market gets over that number, it often pulls back, tries to get and hold above it. When it finally breaks through it, it's not uncommon to get back up to it and pause against it to see what next. Look what you've been doing. Since you've been breaking down, and on the rallies back, you're coming to that general area. That's where the market's fighting a battle. When you look at this chart, is the trend up or down? Well, I'd be shocked if you told me it's up. The swing line is down. Neutrality comes in because the price did close over the 18-day average by 1 full point, but it did it. So you've got the bias up, the trend down. I think the pros went short at this number, and I think over 39.12, they wrap up their trading and go, okay, that leg of the downside ended. As for the Bollinger Band, let's talk about what these bands do. The markets will trade within these bands 95% of the time. It's an algorithm designed to do that. You go to 95%, not 100 and not 80, because you want to hit the band enough where you kiss it. And when you kiss it, what you're looking to do is try to take some money off the table. It gives you a resistance zone. Unlike the stock market, traders in futures go long and short. In the stock market, watch financial TV if you don't believe me. It is a question of what you buy and get out of, not a question of going short. You might buy one stock versus another, or one sector versus another, but it's rare that you get traders out there that are called short sellers that are telling you to go short. That's considered a no-no. So understand the fundamental difference between how the two markets operate. It's very, very important. Also remember that in futures, for every long, there's a short. There's no such thing as, I'm going to put out some futures out there that are Treasury futures, if you will. They're coming from God knows what. You have to have a long for a short. And when they come together and get out, you lose the open interest. Okay, so we have a downtrend. The key there is not to get over that number. The market's fighting its battle, agreed? The first time you hit Bollinger Bands is often where traders take some money off the table. You don't have to believe me. In fact, I don't need you to believe me. Go back and do your own homework and take a look at it. That's better than me telling you. My job here is to point things out, and for my subscribers, my paid subscribers, I take care of that a different way. I'm telling them that each and every day in the morning. For you, I'm pointing it out, but you're not paying me the same money they are. They're paying me, and I hope they're listening. So yeah, the market gets through it, and you'll go, oh, he doesn't know what he's talking about. And then all of a sudden, you get a day like this on Friday. Then you come up and, what number did you stop at? My gosh, Ira, you said it could go back to that 18-day average. Then the market starts fighting around like it is right now. Okay, I can live with all that. To lose the current trend, I've just told you what you have to do. And in terms of momentum, it's up. So we have two of the three elements that are pointing up right now. Momentum is up, as you can see. You hit your downside target several times, went back to the 18-day average, failed there. You haven't yet failed. You've got to take out 39.12 to say this is a failure. If you take that out, then you're back to the drawing board. What next on the chart? If you got through there and you went to the upper Bollinger Band, I would think the pros are going to fight the market there. In the Nasdaq, what did the market do? Let's go back to what I show you each time. When a market is coming down, the first thing I'm going to tell you is you hit Bollinger Bands and the pros are looking to get short. Does it have to be the 18-day average? No, there's other moving averages I use in my paid subscriber video. One more that I'll use there. And I think the traders that look at that know what I'm talking about. But you're oversold here. What are you trying to do? I'm not trying to be a hero. Okay, oversold in a downtrend, again hitting the Bollinger Band. Come out, put out, come down, bounce. But now too oversold to go short. This is the first time other than right here when the market did this. That's pretty oversold. I don't think traders are going to sell this bounce right away. You'd have to get a pretty good rally to get out of that condition to get them interested. And then you'd have to take out that high because you got the pattern of lower highs, lower lows, and it didn't do that. Instead, it sort of stalled. It's not in oversold territory. You're back down. You're oversold again. You get oversold. You have to be a machine with it. The market is saying, okay, that's a pretty good number. You're going to say, I think it's going lower. Okay, I accept that too. So if the market does go lower, you're already in oversold territory. Do you have the power to get through the 100-day averaging green and keep going? Well, the market gets there, and you're going to tell me, Ira, you didn't know, I got you. And I'm going to keep saying, but you're oversold. You're not embedding, which means converting this, getting these numbers going sideways. The market's ripe for a correction. Market comes down, you're still going to tell me you don't know what you're talking about, and you get a bounce like yesterday, and finally today you get more of a bounce. And I'm still there arguing with you that on the Nasdaq, I think the pros, if you get up to the 13,160, wherever that 18-day average is, if both of these numbers get out of and above 30, that's where the pros might come out. Keep it in the 20s. I don't think you're going to be able to get them to want to add many shorts here. But this is an area of concern if you're short. In the Dow, you are trading between the upper band, the lower band, back to the upper band. Notice you faltered again at it. 95% of the time, you'll stay within it. Are we trending? No. Is the market made an all-time high? Yes. So how could you say, Ira, you're at an all-time high and you're not trending? Well, what's your definition of a trend? If you're going to say, hey, if the market's making all-time highs, it's in a bull trend, I agree. Are you saying it's trending as a chartist, which means you've got a pattern of higher lows, higher highs? You do not. That's the difference. I realize the bias. So do you. Are we getting into an area where you got to get concerned? You're there. Any reading over 70, the way that I teach charting, is an overbought condition on the slow stochastic. The traditional way is you're going to look at 80. I found many ways to do that better. So I'm using the tools of it, but I refined them over the years. And I can consider this an overbought market that's not in a trend. It's trading between the two Bollinger Bands. It got up to a resistance point, and the market's backing away from it. When we come to the Russell, well, what do you do the first time you hit the 18-day average? Well, let's go back before I even answer that for you. Here is the market doing similar action, lower highs, lower lows. If you hit the lower Bollinger Band, what do I think the pros are going to do? I think they're going to take money off the table. Are we oversold? Yeah. Any reading under 30 is oversold. Got it? So I changed some of the parameters, but I'm always that way with it. So now you're in an oversold condition under the Bollinger Band. What are the odds of staying under the Bollinger Band? 5% of the time. So 95% it won't, and it's the first day under it. So I subtract 1 percentage point for each consecutive close outside of a Bollinger Band. Therefore, if it's 5% and you're under, I got a 4% chance the next day of the market staying under that band. That doesn't mean you're a buyer because, 96% is going to go up. The market can go sideways in the band under it. It's that staying under the band with your money at risk may not be the best play. So here's the market coming up. We have now got our readings at 37 and 40. You're no longer oversold. So if you're no longer oversold, momentum's neutral, you hit the Bollinger Band, trend down, what do I think the pros are doing? Wouldn't surprise me if they're selling short at the 18-day average of closes if they can get it. Did they get it here? They did not. They got it today. Where's their risk? If you get over 22.8150, you break that trend. You've got momentum up. On the close, you have bias up. 2 of the 3 elements to be friendly are up. But can you develop an uptrend? No. The most you can do is stop the downtrend by getting there. What if the market gets now and rolls back under 22.35? The bears are going to go, gotcha, and they'll be looking to see can they put the market down there. I'm just pointing out what I think goes on. In the VIX, I've been looking for a pullback. If you're one of my subscribers, I've been saying it, be it subscriber here or in the other, I said, you're probably going back to that 18-day average. Is the market going to take out 22.45? If it does, this uptrend leg is over. So that's going to be the key. And you're going to say, do I think the pros bought? No. Too tight. Not enough room there, I think, for them to want to buy that and then fight with the 100-day average. That's not a bearish sign, just too tight. 30-year bond. You have been oversold and not embedding. To embed, you have to have both numbers under 30. I know you wouldn't believe it today, but both numbers under 20. Both are under 20 today. Yesterday, both under 20, and the day before. So, are we embedded? Takes 3 days to do that. The answer is yes. Two elements come from that the way I teach charting. First, this is where the pros on this rally are selling. Second, they lose the embedded reading. By the close, they'll want to be out. If they lose the embedded reading with a reading, let's say over 21 or anything like that on the slow stochastic, where could the market go? The odds favor it's going to make a run to the upper Bollinger Band. The problem we've had in this market is that's a high probability trade. It happened here. You lost the embedded reading, should not get back under the most recent low. Market went absolutely nowhere, got under that low, and now you embed it again and you're getting a bounce. Do I trust it? No. So there's a point where even though my work says one thing, I pay attention to when it doesn't work. The bigger play here is that interest rates are not breaking down. That could be a trap for those of you that want to be bullish. It's one thing to be out of the market, maybe on a signal, but to play a contra, I don't think it's there. The 10-year note, as you go further into the curve yield, what do you have? Are we embedded? At the close of business, both numbers under 20 today, both under 20 yesterday, not Friday. So unlike the bonds, you have more work to do here to see if you're going to embed. If you lose the embedded reading like you did in the bonds, did we lose it? No. If you lose it in the bonds, I still have that target, but the bigger target is not to be short. Got it? So it tells you that momentum has been lost. I like when I'll follow whenever these are lost on markets all over the place in my subscriber videos. And I'm talking the paid subscriber because it's a high probability trade. But when they stop working one time, I pay attention to why is that market not doing that? It's that high of a probability trade. So we'll see what happens. In the dollar index, what are the odds of staying over the upper Bollinger Band? Well, 5% of the time you will. So as of yesterday, we had 1, 2, 3 days in a row over. I subtract each consecutive day from that 5% rule. And it tells me that coming in, I had a 4% chance. No. What did I have? 2% chance. Yeah. 3 of those 5 days, 3 of those 5 percentage points are gone. So I have a 2% chance of the market staying over the upper Bollinger Band. That doesn't mean I'm bearish, but let's assume that you were bullish in the market and you're there. Do you want to stretch your hand at 98% of the time, according to my rule of thumb? Doesn't mean I'm right on it. It's my rule of thumb. It's going to pull back. Now let's deal with that rule of thumb. The more the market can do that, is it a sign of weakness, strength, or it's just stretched out? It's a sign of strength, not weakness. The fact that it accomplished that is a powerful sign. So if the market, I look to see what are the stochastics doing, if they were embedded, which they're not, I would be saying, okay, you're just looking to see can the market come down a little to get you in. I'm not saying that here because the market is overbought. I'm certainly not in the bear camp, but too overbought for me to be calling up my John Doe client. John, I think we should be doing this. In the euro, it's the flip-flop. It's a mirror image. Bingo, the other way. Oversold, not embedded. I think the pros are out of the market now. It's that simple. But I think they started coming out right here. I think this was just gravy for other people that hung around. British pound is void of trend. It had been in a beautiful trend. It had run a heck of a line from here, pulled back to the 18-day average, couldn't quite make it to the Bollinger Band, and now it's in oversold territory. Any reading here that's under 30 says it's oversold. Certainly both numbers aren't going sideways under 20. It's a mishmash. In Bitcoin, momentum up, bias up, trend up. Do you agree? Higher lows, higher highs over the 18-day average. We were like this the other day, and I was telling my traders, this was yesterday, I said, wouldn't be surprised if this market tries to reach up for the Bollinger Band. A lot of risk, obviously. It's fun to look at a chart, but I don't have clients. I really don't have clients trading this. The margins, I think our firm wants $100,000 or more per contract. It's pretty expensive. I think it's 40% of the contract value. There's 5 coins. So tonight's value, 5 is 260,000. Let's assume it's 50%, 125,000 a contract, rule of thumb. Big margin, but fun to look at. Is the average person trading this? No. It's for a well-heeled client. That's why you don't have the crazy volume that you get in other commodities. Could it get up there? It certainly could. Remember, the cash market's very large, and they look at this all the time. Ethereum is going to be a much more fun, and I'll bring it on here, once it has enough data. Not value, but data, so I can bring up a chart that makes sense to you. I want to use futures, not the cash. In the Brent versus the WTI oil, well, Brent is still strong as can be compared to that. You don't need me here to tell you that. The bias is up. The market got over it back here. What did it do from that point? It checked itself out. Got over for the first time. Now is it going to fall back to it? No, it kept going. Where's it going to check? Look at that. Just there's your one time that it checked it. Okay, so going to get back through these lows. Think of the swing line. You've got the pattern of higher lows, higher highs. Now you broke it. What's the next pattern going to be? Comes back. That's why I like this 18-day average. It tells you bias, but often markets make a run at it to see what they're going to do. Not last, but in the energy. Overbought into the upper Bollinger Band here. I told traders, overbought, maybe it'll go up, I don't know, but it certainly looks high, and I still believe that. WTI, same thing, still looks high to me. You buy the Bollinger Band in an overbought condition, have a great time doing that. Rebob gas, this is different. I'm friendly this, but you lost your embedded reading today. What do you think I've been telling clients up here? Just that. Maybe this gives you the opportunity now for a correction. But I think the bigger picture in gasoline remains unless you get back under 193.87 to the upside. Maybe it's gotten a little crazy here as the markets come from the 130s, 140s all the way up here. But the driving season's ahead of us. I'm getting my car back in the morning. Just had it all serviced for the spring, and away you go. So, I know what's going to happen. Gasoline prices in California, the demand over the top as people want to drive. Then we get to nat gas, and nat gas is at that funny time of the year. You're going to consume less of it for heat now. You don't need air conditioning in most parts of the country. That's not to say it doesn't get hot in Florida, part of Texas, Arizona. You need it. But the vast amount of the country, no, you're not going to use it, so demand falls away a little. Remember, tomorrow morning we're going to get the EIA numbers. So if you're interested in this concept that I'm giving you, you might want to visit my morning futures video. You can go to our website, and under the word research, that's where all the information is. And it is there that I put out for my subscribers ideas on where I think they should buy, sell. I'll tell you, hey, I'm dead wrong on that one. I've been dead right on that one. You'll find me consistent. You won't find me jumping from point to point. If I did, I made a mistake. I generally don't do that. I make plenty of mistakes, but I won't. If I say buy and it didn't work, I'm not going to mull it over. I'm going to go through it. And what if it worked? I'm not going to gloat on it. Each video is going to cover first thing, because I record 5:40 in the morning, the futures video. So you're going to get the news of the day from Asia, Europe, what's here, and the reports coming out, estimates of what they're looking for, because most of the reports start coming out after 6 o'clock in the morning until about 9. The price, a cup of coffee, a good cup of coffee with your tip, about $7.95 for the first 30 days. There's 24 videos a month. Each one's about 20 minutes long. You decide if they're worth it. The worst you lost, a cup of coffee. Maybe, just maybe, you get a trading idea, or maybe your own idea gets reinforced. Maybe your own idea, you see a reason not to take it. You decide the end result. In any case, you can call our staff, you can go to our website, under the word research, all the information you need is there. Again, if you like this, please give me a thumbs up on YouTube, or hit subscribe there so you know when I put these out, they come right to you and they tell you I just posted it for you. I'm Ira Epstein. Have a good day.